All right, let's talk about Bitcoin. Specifically, its absolutely wild price movements. It feels like it's impossible to predict, right? Well, it turns out there might be a really good reason for that. Let's get into it.
I mean, seriously, why are the predictions always so wrong? You'll see one headline saying it's collapsing to zero, and the very next one says it's soaring to, I don't know, $250,000. So, who are you supposed to believe? The thing is, predicting Bitcoin's price is just famously hard. Its entire history is just one giant roller coaster of huge rallies followed by these spectacular crashes. Even the experts are left scratching their heads. So maybe the real question we should be asking isn't what the price is going to be, but why it's so darn impossible to figure out.
And the answer, believe it or not, might actually come from physics. There's this classic problem called the three-body problem. Basically, when you have three big objects in space, like stars or planets, all pulling on each other with gravity, their orbits become a complete mess. They're chaotic, totally unpredictable. The tiniest little nudge to one of them can send the whole system flying off in a completely different direction. And honestly, this is the perfect way to think about Bitcoin. Its price isn't being pushed around by just one thing. Nope, it's being jerked around by the chaotic, messy interaction of three huge, competing forces. So, to really get a handle on this chaos, we're going to break it down and look at each of these bodies one at a time. First up is Bitcoin's own nature, its code and identity. Then we'll get into the market's own special kind of gravity. And finally, we'll look at all the wild, unpredictable stuff happening in the outside world. All right, let's jump right into our first body, Bitcoin itself. This is really the heart of the whole system. What's so interesting here is that it's defined by this super rigid, unchangeable code on one hand, but on the other, its whole purpose is constantly changing depending on who you ask. You see, right at the core of Bitcoin, there's this major identity crisis. When Satoshi Nakamoto first dreamed it up, the idea was simple, a peer-to-peer electronic cash system. A way to send money without needing a bank. But let's be real, almost nobody uses it for that today. Instead, it's become this big speculative asset. People call it digital gold. And this shift from a practical tool to a high-stakes investment creates this constant underlying tension about what Bitcoin is actually for and what it's truly worth. And then there's something baked right into its DNA, into the code itself, the halving. It's this powerful, predictable event. Every 4 years or so, boom, the number of new Bitcoins getting created is sliced in half. It's a totally pre-programmed supply shock. It's designed to make Bitcoins scarcer over time. And if you look at the charts, historically, these halvings have almost always been followed by some pretty big price jumps. It's like this constant, rhythmic heartbeat inside the system, always pulling on the supply. Okay, on to our second body, the market itself. And this one is all about people. It's about human behavior, the messy, complex, and, let's face it, often totally irrational psychology of millions of different investors. We're talking everyone from the person buying a few bucks worth on an app to the giant whales who can move the entire market. And yeah, you should know this market is, well, it's not exactly a level playing field. Not even close. There are documented cases of massive manipulation. You've got stuff like wash trading, where they just create fake volume to make it look busy. Some say that's up to 70% of the volume on certain exchanges. Then there's spoofing, placing fake orders to mess with people's heads. And even liquidation hunting, where huge players deliberately crash the price just enough to force smaller traders to sell at a loss. All these tricks create this artificial gravity, yanking the price around for reasons that have zero to do with Bitcoin's actual value. This quote here really just hits the nail on the head. For a lot of people in the market, the price is driven by something called the greater fool theory. It's a simple, if a little cynical idea. You're not buying it because you think it's inherently valuable. You're buying it because you're betting that some greater fool will come along later and buy it from you for more money. It really is like a giant high-stakes game of musical chairs, all driven by pure hope and speculation. But here's the thing. The players in this game are changing, and fast. The market's going through what you could call a silent IPO. The ownership is quietly shifting away from the early cypherpunks and retail folks and moving into the hands of massive institutions. We're talking about Wall Street giants, big corporate balance sheets, maybe even governments. This brings a whole new, super heavy gravitational pull into the system. It might make things a bit more stable, but it also means a ton of power is getting concentrated with a handful of financial titans. And that leads us perfectly into our third and final body, the external forces.
Think of these as the asteroids and comets flying in from deep space. They are powerful, completely random events from the outside world that can come out of nowhere and just completely knock Bitcoin's orbit off its path. I mean, just take a look at some of these recent events. The US finally approves Bitcoin ETFs, and suddenly the floodgates are open for all this institutional cash. You get a change in administration, and all of a sudden the political mood shifts to be pro-crypto. The SEC drops a few high-profile cases. You see, these are huge, unpredictable shocks. They have nothing to do with Bitcoin's programming or what the traders are feeling that day. These are outside events that just swoop in and completely rewrite the rules. On top of all that, Bitcoin just doesn't live in its own little bubble anymore. Its price is more and more tied to what's happening in traditional markets, like the stock market. So now, all those big macroeconomic tides, we're talking global inflation, what the Fed decides to do with interest rates, any kind of global uncertainty, all of that now pulls on Bitcoin's price just like it pulls on Apple stock. For better or for worse, it's officially part of the bigger financial machine. So, what happens when you throw these three huge, powerful, and unpredictable forces into the same system and let them all pull on each other at once? Well, you get exactly what the physics problem predicts. You get chaos.
So let's just recap, right? Body one, that's Bitcoin's own code and its identity crisis, which creates this never-ending debate about its value. Body two, that's the market with all its wild speculation and emotion. And body three, that's the rest of the world, just throwing in random, powerful shocks whenever it feels like it. And this is why pretty much every prediction fails. It's because we try to look at just one of these forces in a vacuum. We get all excited about the halving or a new ETF approval or what the Fed might do. But the thing is, none of these forces act alone. Their constant, messy, chaotic interaction is the system. It's not a bug, it's a feature. Just like in that physics problem, the instability, the unpredictability, that's fundamental to what Bitcoin is. That chaotic orbit is the whole point. It's what makes it so complex, so destabilizing, and so weirdly compelling. So that leaves us with one last, pretty big question to think about. If we just stop trying to predict Bitcoin's price and instead just accept that this chaos is part of its very nature, what does that really mean? What does it tell us about this bizarre new asset? And more importantly, what does it mean for the future of a financial system that, like it or not, now has to deal with it?